Poland's economic rise to power over the last 30 years or so has been remarkable. Following the fall of communism in the early 90s, Poland's GDP per capita has increased more than tenfold and has been outpacing its EU neighbours. In fact, in the second quarter of this year, Poland recorded the EU's fastest GDP growth and is heading to have the third highest GDP growth in the EU in 2025. So in this video, we thought we'd take a look at Poland's impressive economic growth, how all of this happened, and whether the economy can actually sustain this momentum. Before we start, if you haven't already, please consider subscribing and ringing the bell to stay in the loop and be notified when we release new videos. Poland's impressive economic rise comes after an extremely dark history. Largely because it sits between Russia and Western Europe, it's been invaded many times. Poland suffered enormously in the Second World War and lost more people than any other future EU country in the Allied forces, and was subsequently subsumed into the Soviet Union's sphere of influence. In 1990, when the communist system collapsed, Poland's GDP per capita was $1,700. For context, the UK, France, Germany, and Italy all had GDPs per capita somewhere between $19,000 and $20,000. So Poland's per capita income was literally a tenth of its developed Western European neighbours. Even poorer Western European states were significantly wealthier than the Poles. Portugal, for example, had a GDP per capita of about $8,000. But fortunately for Poland, things have changed a lot since then. Poland's economy grew steadily in the 90s, reaching a GDP per capita of about $5,000 by the early 2000s. After it joined the EU in 2004, this growth accelerated further, and Poland reached a GDP per capita of $14,000 in 2008, just before the financial crisis. Today, Poland has a GDP per capita of about $22,000, literally more than 10 times what it was in 1990. And not far off Western European countries like Portugal and Greece, which have GDPs per capita of about $27,000 and $22,000 respectively, making it one of the fastest growing economies in the EU. So how has this happened? Well, we've gone into this in more detail in other videos, but as we see it, there are essentially three reasons why Poland's economy grew so quickly. Firstly, Poland has been the largest recipient of EU cohesion funds, receiving a total of €213 billion since it joined the EU in 2004. Now, Poland has used this money wisely, investing and developing both its infrastructure and agriculture. Secondly, Poland has greatly benefited from its membership of the EU single market, which has allowed for the free flow of capital, goods, services, and people. Situated between Western Europe and Russia, with a large population and solid consumer base, has meant that Poland has become one of the EU's trading hubs. Intra-EU trade now accounts for 74% of Poland's exports and 67% of its imports. Finally, Poland's diversified economy has also boosted economic growth. While agriculture and manufacturing contribute significantly to the economy, other industries are emerging too, which are becoming just as, if not more, important. There's the automotive industry, which employs approximately 200,000 Poles, making it the fourth largest industrial employer in the country. There's also Poland's ICT sector, which has become the #1 destination in Central and Eastern Europe for research and development projects. Poland's government also has some pretty big ambitions for its defense industry too. It plans to raise the country's defense spending to 4% of GDP and create the largest army in Europe. This high defense spending has led to an influx of large aerospace companies setting up in Poland, especially in the Podkarpackie region, known as Aviation Valley. Poland's diversified economy is partly the reason why their economy has proved so remarkably resilient to crises and external shocks. For example, in 2020, after the pandemic, Poland's GDP contracted by only 3.5%, which was significantly less than the OECD average of 5.5%, and well below, say, the UK, which experienced a contraction of 9.9%. Poland's GDP also bounced back much quicker than the rest of the EU post-pandemic, and recorded rapid GDP growth in the following months. Consumer confidence has also rapidly improved, and Poland continues to be one of few European countries recording GDP growth of over 3%. So, will Poland's economic miracle ever end? Well, one can never know for sure, but despite all of the economy's strengths, there are at least two reasons to be cautious. The first reason is inflation. Poland's soaring wage growth has been overwhelmingly driven by high inflation rates, triggered by the pandemic and the war in neighboring Ukraine. This year, record public sector and minimum wage hikes have seen wages soar. In Q2, the average wage in Poland grew by 14.7% year on year, the largest increase in at least 2 decades. However, there is a risk here that the economy enters a sort of wage price spiral, where higher wages mean more inflation, which creates demands for higher wages, etc. And there's already evidence that the Polish economy may be edging nearer to that point. Inflation, which reached a staggering record high of 18.4% last year, has been steadily rising this year too, and continues to linger above the National Bank's target range of 1.5 to 3.5%. Furthermore, the country's low employment rate of 2.9%, the second lowest in the EU, is raising some eyebrows. While low unemployment sounds good, 2.9% is perhaps too low, and a symptom of significant labour shortages. Exacerbated by a declining and ageing population, the country's labour market is the tightest it's been since the 90s, and employment growth has been contracting. In the first quarter of this year, for instance, there are around 112,000 job vacancies, and estimates suggest that by 2035, Poland may lose around 2.1 million workers. These labour shortages have already shown up in sectors like transportation and construction, in large part because the heavy reliance of these industries on Ukrainian workers, many of whom left to join the war effort following Russia's invasion. The second reason why Poland's economy could struggle is weak external demand. This is largely because, alongside the steady depreciation of the zloty, Poland's export industry has been struggling with weak economic conditions and low growth in the Eurozone. Now, the Eurozone accounts for 75% of Polish exports for goods, but Germany, Poland's biggest trading partner, is particularly struggling, which is reducing the need for Polish export demand. As a result, Poland's been running a current account deficit since July. Its export sector is projected to have a negative contribution to growth in 2024, with the steepest export drops recorded in investment, consumer goods, and passenger car exports. Nonetheless, Poland's fundamentals are steady. Poland is still considered an attractive destination for investment. It's currently ranked 4th in the EU, after the bloc's largest economies, for new jobs created as a result of FDI. To maintain this growth, though, the Polish government will have to control inflation and somehow meet the economy's labour demands. Now, the easiest way to do this would be to increase their migrant quota, something that the current government, which has taken a hardline stance on migration, isn't likely to do. This is just one of many major stories going on, with 2024 marking a major year in both news and elections. In fact, with the majority of the world heading to the polls, 2024 has been a pretty unique and important year. So, in the latest issue of our magazine, Too Long, we discuss those elections, diving deep into the 29 biggest elections of the year, making sure that you understand what really happened, and commemorating one of the biggest years in news. We don't just discuss elections, though. We also run through China's trade issues, Biden's successes and failures, the UK's new opposition leader, and the state of the wars in Ukraine and Gaza. Plus, the fact that it's a magazine means that we're not constrained by the time limits or algorithms imposed by YouTube. Unlike fleeting news cycles or algorithmic feeds, Too Long offers thought-provoking analysis and comprehensive coverage that's truly worth holding. Purchasing is also a great way to support the channel. Running TLDR this year has cost just under £800,000. So if you've enjoyed our coverage in 2024, then picking up a copy of Too Long doesn't just get you high quality reporting, it also allows you to invest in independent journalism and join us in shaping the future of news. So if you're convinced, you have 3 more decisions to make. Firstly, do you want a physical or a digital copy? The physical one is a high quality 60-page perfect bound magazine, shipped right to your door. But the digital is slightly cheaper, especially if you're concerned about shipping. Your second choice is the standard or premium edition. The standard is just a copy of the magazine, while the premium issue gets you access to our behind-the-scenes monthly podcast, The Bullpen, where we break down all of the production that goes into Too Long and TLDR more generally, as well as getting your name printed in the thank you section of the magazine. And your final decision is if you want to subscribe. If you do, you'll get a copy of Too Long every 4 months, meaning that you'll never miss an issue. Plus, you'll also get 25% off every copy as long as you stay subscribed. If you can, subscribing also gives us a reliable income stream, which is super useful for us. Regardless of which option you choose, you can buy a copy right now at toolong.news or by clicking the link in the description. As always, thanks for your support and thanks for backing Too Long.